Hello, good weekend to all. This is Adil bringing you a review of the US markets for the trading session Monday, the 23rd of February 2021. Okay, I'm not going to bore you with the fundamentals too much. I'm just going to jump in straight, hopefully, into the technicals. Just to clarify, prior to jumping in, just obviously slight insight in terms of the yields. Okay, that certainly seems to be the main focus point for the markets, with the main story over the weekend. As yields rise, forces the Fed to be more hawkish, but again, they certainly aren't budging at all. So will the markets make them budge? That's the question. Okay, so that's what kept the markets at bay to a large extent, the reflation trade. Okay, so looking at the 60-minute chart, you can see here of the S&P 500, there's a potential, again, bear this in mind, potential for a H&S formation. And what's the narrative? The narrative obviously is yields rising, which means that obviously interest rates need to rise, which indicates a stronger dollar, which hasn't been the case, by the way. Okay, has not been the case, and this is what caused the weakness on Friday as well. So again, yields rising, alternative funds, given the fact that the S&P is at such lofty heights, are they now rotating out of equities and potentially into bonds in terms of a safe haven scenario? That's the question, given the fact that we've had quite a stellar run so far. Now keep an eye on this key trend line in the S&P 500. I've been watching this, it's been holding pretty well in terms of the S&P. Again, previous support equals previous resistance equals support, obviously has held as well around the 38.70 zone. Okay, keep an eye on that. Okay, now in terms of the sell side, again, increased volume on the daily chart. So again, not exactly a bullish sign to a large extent, but nevertheless, the stimulus obviously remains the overhang. The $1.9 obviously stimulus package, but will that be negated by the scenario in terms of vaccinations, potential obviously rise in infection rates, etc.? I mean, there's so many other factors to consider. I mean, what if these vaccines fail to work? I mean, there have been instances in Germany where individuals have been vaccinated and still yet obviously unfortunately have caught the virus and obviously passed it on as well. So that certainly is another factor to take into account. Will there be more mutations and variations where these viruses obviously fail to have that positive effect? Again, that certainly needs to be taken into consideration. Also, over the weekend, we've had reports of the HN58 flu virus. Apparently, it's passing on from obviously animals, humans, and again, that could have a potential for mutating and obviously spreading as well. So watch out for that news as well to see if that impacts markets. Now, again, we're just focusing really on the daily chart and the technical, should I say. So weekly chart, again, one can argue still maintains its bullish posture. Daily chart, again, now some exhaustion. Your pivot high will be 39.50 to work with, and your support will be 38.70 to work with. So 39.50, 38.70. If you break 38.70, then obviously the bears are back in control on the back of the yields obviously spiking, which in turn indicates higher inflation. Higher inflation forces the Fed to raise rates, and obviously that certainly is one hell of a predicament, given the fact that obviously the US market is trying its best to obviously remain accommodative and support this recovery post obviously COVID. So keep an eye on that. Okay, 60-minute chart, again, H&S formation, will that play out? Will the yield story be the mainstream, or will there be another factor that comes into the equation? Will there be a stoppage in terms of the actual stimulus package being enacted, etc., etc.? There could be various variables. Now, this week, well, one of the surprising variables obviously was a deep freeze, which obviously caused Texas to go offline and obviously triggered a rally in commodities. Now, talking about commodities, this is an interesting one. So let's just bring up the energy sector here. Now, inside bar on the daily chart, obviously you've got a bearish engulfing candle, then an inside bar. So again, that certainly is a worrying sign. If energy is the lead rally in the S&P, and if we are playing this so-called inflation trade, then energy obviously needs to move and guide us higher, and that certainly isn't the case. Technology certainly has stalled as well. So let's just bring up the chart of Russell 2000 first, because obviously that's a true representative really of the actual stock market in terms of the US, given the larger nature of the stocks. Okay, Russell 2000, not exactly a high, more of a bearish pattern for me, really. It's just gap fill, and again the pivot high remains. So are we looking at a scenario of a lower high? That's the question you need to ask yourself. Okay, are we looking for a lower high on the back of this yield story? Okay, yields rising, interest rates rising, hawkish stance of the Fed, no longer accommodative, and therefore obviously all the bullish news has been baked into the cake. That's the question you need to ask yourself. Okay, keep an eye on that Russell 2000. If we've continued to make this lower high on the fib retracement here, okay, if you continue to make this lower high after this double top 60-minute chart, then obviously gap fill here as well, then you are looking for a lower low, and therefore obviously the S&P potentially could go lower as well, so bear that in mind. In terms of the Dow Transportation average, impressive. I did say to you, watch out for the Dow Transports. If they remain bullish, the market remains bullish. So we're still oscillating in that double top region. There's no convincing breakout as of yet. Obviously, just bear that in mind. Okay, we did have a move higher here, and then obviously we sold off quite sharply back below the 13,000 level. So keep an eye on the Dow Transports. If it continues to push high on the back of the stimulus story, obviously the markets will remain juiced and move higher. Okay, in terms of the Dow 30 remains bullish. Okay, so again, can't ignore that. Again, it's a breakout, but is it a fake out? Again, that could be a possibility in the back of obviously yields rising as well. Now the Nasdaq is the weakest story in town. So again, that has been the main stimulus or stimulant, should I say, for the S&P 500. Now there is a potential reversal pattern playing out here as well. So a head and shoulders formation here. Okay, so you've got your right shoulder here, you've got gap fill here at 13,770. So again, watch out for that level. Okay, if the Nasdaq starts to reverse and potentially attempt to go for gap fill at 13,200 zone, okay, or even potentially lower at 12,900, then obviously the S&P 500 will follow suit. Okay, so keep an eye on the Nasdaq. Again, keep an eye on the Russell. If they both make lower highs, then you are looking for a further weakness in the S&P on the back of this yield story that certainly seems to be doing the rounds over the weekend. Now, one of the things that doesn't add up for me, really, from my perspective, is the dollar index. Okay, if the yields were potentially moving higher, then why is the dollar index not moving higher? That hasn't been the case. As you can see here, we are still making a base and holding that level. So if we just bring up the 60-minute chart, so no considerable thrust higher, even with the higher inflation numbers obviously coming in this week as well. So if we hold this double bottom and the dollar index starts to rally, then obviously that'll take the wind out of the commodities, and therefore obviously cause the stock market to start to swoon on the back of obviously fears of hawkish tightening. Okay, so again, keep an eye on for that. In terms of semiconductors, they remain well bid. Obviously Bitcoin certainly is higher, and that certainly seems to be the major catalyst for tech to a large extent, but for now it certainly is taking all the limelight. I think we're hitting 57,000 over the weekend, very impressive. But again, from my perspective, it's just one big Ponzi scheme to me. I just can't see the value in Bitcoin at this very moment in time until it's regulated, until it's approved, until it becomes a real asset, and something that is actually my understanding is regulated, and it's underwritten by something as well at the moment. It's just mere speculation, and long may it continue. And obviously I wish everybody, those that are investing, wish you the best and all success with regards to that, but I certainly don't see any value in it. I prefer gold. Okay, in terms of the market here then, let's just quickly bring up the semicons we've covered. Biotech. Now Biotech again isn't making that double top or isn't making a higher high. Potential for a lower high in terms of the daily chart, so it looks exhausted. 60-minute chart certainly looks weak, so there's no real conviction here in terms of the move higher. So there's a lot of patterns here, so that are indicating weakness. The only one obviously is the Dow 30, but we all know that's not a true representation of the stock market. It's just the top 30 stocks that are juiced, and really I never really look at that for a real signal, to be honest. It's more the Dow Transports that I look at, and obviously the Russell 2000, which is a more of a broad generalization of US equities. So okay, so taking that into account, so looking at light crude certainly is pausing as well, hence the reason why you're seeing the commodity index move lower. Interesting scenario at the moment. Okay, so we did attempt to close this gap, which we did. Interesting how gap fill obviously caused the reversal in the chart of oil. Okay, and we are now looking into potential weakness in the back of the deep freeze over, and the Saudis obviously increasing output as well. So watch out, oil prices certainly headed lower from my understanding and my perspective, and obviously that will cause the so-called obviously commodity rally certainly to give up as well. Now copper again, in very impressive move in copper again, exhausted on the weekly chart from my perspective, certainly coming into heavy resistance now around the 4.1 to 4.2 zone. So again indicating weakness, which in turn runs in tandem with the actual wisdom tree. Okay, this is the commodity index. Looking at this as well, this is obviously in concert with the weekly chart, certainly coming into resistance here as well. So a lot of resistance. We're going to certainly approach that soon. Obviously, if it continues on the back of lack of supply, etc. issues, those things that certainly need to be taken into account. I'm no expert in commodities, but that certainly is one that I'll be watching out for. Okay, bonds continue to fall, as you can see here. Obviously sending the yields higher. Now in terms of the bond chart, let's just draw this for you. Okay, we've broken the key support, so one would indicate, and this is why I've been so bullish on the dollar last week, but certainly hasn't helped with the commodities getting that squeeze higher, which in turn has helped the Kiwi, helped the Aussie to a large extent. Okay, but nevertheless, this is the scenario that bonds continue to sell off. We come to potential support down here around the 133 zone, potentially even lower, which in turn obviously sends yields even higher, which in turn obviously sends the dollar index screaming higher as well, obviously, which in turn triggers fear, and obviously you are going to see a move out of equities, potentially more into bonds in terms of a safe haven bid. So keep an eye on that. So keep an eye on the news flow over the weekend as well. So in terms of the last and final sort of comments here, in terms of US equities, the focus is the H&S formation, number one, on the S&P 500. Okay, your pivot high is going to be 39.50. You've got a lower high here using your Fibonacci retracement tool. Take the pivot high, take the pivot low. This is your neckline around the 38.88 zone. You've got a lower high, fib 75% around the 39.30 zone. That's the area that I went short as well on Friday, so a nice little trade there for 21 ESP points, I think, or 22. That was a decent trade. Okay, so again, looking for a lower high and then H&S formation. Now let's just have a look at the potential downside target if that were to occur. So H&S, let's just make it easier here. We've got 38.86. Take the pivot high 39.50. I'm just going to call it 39.90, folks, just to make it easier. Obviously, you can do your own correct calculation. So you're looking for a 60-point downdraft. Okay, so that takes you to 38.30 in the downside. Okay, just using, again, this is not set in stone. This is no magic trick, etc. So just bear that in mind. So looking 60 points in downside, and really the focus would be, so you do have a lot of support here around the 38.30 zone, which obviously indicates the H&S target. You've got gap fill first of all at 38.70, so watch out for that. Support is seen at 38.60, next support seen at 38.30, then ultimate gap fill is at 37.80 and potentially 37.20. So we certainly could be in for quite a major sell-off this week. So again, just looking at the charts, and obviously if this H&S is negated, then you just go back to 39.50 and potentially even break out above that as well. So again, that's a scenario too. So both scenarios certainly are in play here. Okay, in terms of the S&P 10-minute chart for now, obviously you've got solid resistance at 39.30 zone, resistance at 39.40, then obviously 39.50 is your ultimate play. If you break out above 39.50, bulls obviously have certainly taken control, and they certainly dictate as well. And this zone here at 39.03 is quite important too, so watch out for 39.03, and obviously gap fill support below 38.86. So they are the areas, and the main focus is the H&S formation on the S&P 500. And those that trade the S&P, just keep that on your radar. Wish you the best for the trading week again. Goodbye now.